This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Not wavering, North Korea fires a missile over Japan. The fourth largest city in the U.S. is underwater, and yet stocks continue to move higher. Why? Debt fight, 1 month to go until the debt ceiling needs to be raised. But the fight to avoid a national default is likely to be a bitter one. And safe havens, with all the political uncertainty swirling both here and abroad, is now the time to flock to those security blanket investments. All that and more on Nightly Business Report for Tuesday, August 29th. Good evening, everyone, and welcome. Tyler Matheson is off this week. It was quite a reversal on Wall Street today. Stocks sold off early on, following the report we told you about last night, that North Korea fired a missile that traveled over Japan, ratcheting up the already high tensions surrounding the Korean peninsula. Couple that with the historic flooding in Houston and the surrounding areas, and you would bet that that would be a recipe for a sell-off in stocks. But that's a bet you would have lost, because by the end of the day, stocks did a nearly 200-point about-face. The Dow rose just about 57 points to 21,865. The Nasdaq rose 18, and the S&P 500 added 2. But gold did react to the missile launch, settling at nearly a one-year high. We'll look more at whether this is the right time to get into the so-called safe haven investments a little later in our program. But first, back to that North Korean launch that has the region on pins and needles. As we said, the missile traveled over Japanese airspace, causing a frightening situation for residents and strong rhetoric from the government. Akiko Fujita has more from Nagoya, Japan.
Well, like so many Japanese here, we were woken up around 6 a.m. local time with that latest launch coming from North Korea, triggering a nationwide alert. Broadcasters breaking into programming, warning of a missile passing through. Some residents in the areas in northern Japan reported getting text messages on their phone urging them to take cover, while others said sirens went off in their community, calling on residents to look for a safe place here. This is a missile that traveled well over 1,600 miles, passed over the northern island of Hokkaido before separating into three pieces and landing in the Pacific Ocean. Prime Minister Shinzo Abe condemning this in the strongest terms, saying that he would make every possible effort to protect the lives of the Japanese. He did speak with President Trump over in the U.S. This is a conversation that reportedly lasted roughly 40 minutes. The Prime Minister saying that President Trump reiterated the U.S. is 100% with Japan and committed to Japan's defense. The timing of this certainly no coincidence, coming amid those joint U.S.-South Korean military exercises. The Japanese and American forces have also been conducting their own exercises over the past few weeks. The Prime Minister did say this was a missile that was tracked shortly after launch, roughly 15 minutes until it landed in the Pacific, which has raised questions about why, in fact, Japan didn't give the green light with those PAC-3 missile defense systems to shoot down this latest missile. There are 3 of those in U.S. air bases here in Japan. The commander of Japan's Air Self-Defense Force simply saying they didn't give the green light because they didn't think the Japanese territory was threatened. We should mention the Japanese are certainly used to these provocations from North Korea, with well over a dozen missile launches so far this year. More than half of those have landed in Japan's exclusive economic zone. But there is a sense that this test may have crossed the line, in part because this was the first time a ballistic missile that was designed to carry a nuclear payload passed over Japanese territory. The implications of a failed launch certainly could have been significant, considering the debris could have fallen on Japanese territory. For Nightly Business Report, Akiko Fujita, Nagoya, Japan.
With every missile launch or verbal jab from North Korea, more attention gets put on the rogue nation's close ties with its biggest trading partner and biggest ally, China. Seema Modi takes a look at that relationship.
This bridge linking the city of Dandong in China to North Korea is a lifeline carrying more than 2/3 of the trade between the two countries. Despite sanctions, Chinese government data shows trade between the two nations increased 37% during the first 3 months of the year. China provides North Korea with most of its food and energy supplies and accounts for upwards of 90% of North Korea's total trade volume. That, according to the Council on Foreign Relations. Global leaders have urged China to stop all trade with North Korea, which continues to conduct missile tests.
I think China can do a lot more, yes. China can, and I think China will do a lot more.
The hope is that by cutting off North Korea's economy, leader Kim Jong-un will have less resources to develop nuclear missiles. Yet, China refuses to give up relations with North Korea. Why? Analysts say Beijing is worried that discontinuing all trade with North Korea could lead to the fall of the North Korean regime, the unification of the Korean peninsula, and therefore a stronger, more dominant Asian competitor to China.
It would be not unlike the reuniting of East Germany and West Germany, and that would present an enormous economic behemoth right on the border of China. So China does not want to wind up with a very democratic, capitalist society sitting right on their border.
But no material change is expected in the near term, especially ahead of China's Fall Party Congress, where leadership changes are expected. CFR President Richard Hawes writing that while Chinese leaders have no love for Kim Jong-un's regime or its nuclear weapons, it dislikes even more the prospect of North Korea's collapse. While North Korea has conducted several missile tests, the one that occurred early this morning crossed over Japan's northern tip, the first time since 2009, seen as the most serious launch yet. For Nightly Business Report, I'm Seema Modi in New York.
So why is the market not reacting to the North Korea missile launch or even the devastation of the historic flooding in and around Houston, Texas? Jack Ablin joins us now to share his thoughts. He is Chief Investment Officer at BMO Private Bank. Always good to have you, Jack. Welcome back to the program.
Nice speaking with you, Sue.
You know, it is curious to see the resilience that this market seems to be exhibiting in the face of the North Korean provocations and also the flooding. What do you attribute that to?
Well, I think the main concern among investors this morning going into the market is, as you mentioned, that the market set the market at the open was down over 100 points in the Dow. And I think it was that investors worried what the Trump's reaction would be. The fact is that because he didn't take the bait, and he more or less said, we'll see, and focused instead on Houston and the devastation there, I think relieved a lot of investors that, this wasn't going to ratchet up to something that, would run out of control. So I think from that perspective, things sort of cooled down. Investors tended to look beyond North Korea. I think that probably, got Kim Jong-un particularly frustrated that he's not seeing the market react to his latest move.
So I talked to one trader today, and he said this has become the market that you can't afford to sell because it does seem to be so resilient. What, in your mind, might it take for this market to retrench a bit?
I think it's going to be something economic. The fact is we are in a global synchronized recovery where now most of the growth is coming from overseas because a lot of the early stimulus and a lot of the early growth came here at home. And so now we're seeing a little catch up. But the fact remains it is a global synchronized recovery. And one that, as long as inflation stays low, has some lags. So I think that's where investors are focused. They are certainly enjoying some decent earnings at the same time. And I think that's everyone's priority right now.
All right. We'll be watching for inflation. Jack, thank you so much. Jack
Thank you,
Ablin
Sue.
with BMO Private Bank. And now to Texas, where Harvey has become a record storm. One location south of Houston has now gotten more than 49 inches of rain, making it the heaviest rainfall total ever in the U.S. from a storm. A levee also south of Houston was breached by floodwaters, with authorities tweeting, "Get out now." That levee has since been fortified, but thousands have been rescued and dozens of offshore rigs have also been evacuated. Sadly, the death toll has also risen, including a police officer who was confirmed to have drowned in his car as he was heading on duty on Sunday. President Trump visited Corpus Christi, where he met with Texas Governor Greg Abbott. And Harvey, while still not done with Texas, is now headed towards Louisiana, 12 years after Hurricane Katrina. And a similar situation developed in Galveston, Texas, where rain pounded that area and rescue efforts ramped up. And Brian Sullivan is there.
Rain continued to fall on Tuesday in southeastern Texas. Some cases, like here in Galveston, much more rain in an area that does not need any more rain. In fact, Hurricane, now Tropical Storm Harvey, has not only broken every single record for the region or for the state, but it is official. Hurricane Harvey, now Tropical Storm, has laid down more rain than any single storm in United States history. It will ultimately deliver more than 50 inches of rain in a single storm. And with this rain has come flooding and the need for rescues. In fact, citizens, Good Samaritans called the Houston Navy or the Cajun Navy if they've come over from Louisiana, have gone out of their way with their boats, even their jet skis and surfboards and rafts to try to rescue people. Listen to this one Good Samaritan in his tale about getting a woman out who had cancer.
We pulled in there, I hopped out of the boat, I banged on the door, no one answered, so then I think someone said to come in, so I pushed in that door. There was water up to my knees, basically, so I walked in there. She was sitting out on the couch, and she was saying she can't move, so then I picked her up on my back, and I got her out to the boat.
And that gentleman, certainly not the only one. In fact, people came from all over, including about 10 miles south. Here in Galveston, the chief of lifeguards and his team of experienced swimmers took their jet skis up there, and they went house to house. We spoke to him about the rescue effort.
As of the end of the day yesterday, we were up to about 160 jet ski rescues, and I think they said over 20 pets on top of that. So yeah, there was a bunch of them. All in Dickinson. We had 4 jet ski teams up there the last 2 days, and they were going house to house.
With all the rain on Tuesday, those floodwaters may rise before they fall. What also has been rising is the estimated ultimate economic cost of all this, with some estimates pegging it as high as $50 billion when all is said and done. In fact, it may knock a few tenths off the entire American gross domestic product in the third quarter. That will be done down the road. Right now, the focus is still local and on saving lives and making sure that the death toll does not go up. For Nightly Business Report, I'm Brian Sullivan in Galveston, Texas.
As you may know, Houston already had a housing inventory problem prior to Hurricane Harvey. And now, with flood victims seeking temporary shelter, that problem has gotten a whole lot bigger. Diana Olick has more.
The focus in Houston is still getting residents out of their flood-stricken homes and transferring them somewhere to safety. But soon that somewhere will become a much bigger problem, as thousands of homes may be uninhabitable for weeks or even months. FEMA Director Brock Long put it simplest.
Housing's going to be very frustrating in Texas.
Homebuilder Lennar has a big footprint in the Houston area. The bulk of their communities, though, are not in the hardest hit parts. But CEO Stuart Miller said the bigger problem will be the coming weeks, with a lack of labor to build and rebuild. Housing stock in Houston, like the rest of the country, is tight, especially for affordable homes. There are, however, 47,000 vacant apartments in Houston, according to Axiometrics, as construction there has been aggressive lately. But the majority of those are very pricey. Camden Property Trust, one of the nation's largest apartment landlords, is based in Houston, and they say all their properties are operational, so they may be able to assist. Airbnb is waiving fees and enlisting support from renters.
If we can't put you back in your home because it's destroyed or because the floodwaters are there and they're going to be there for a while, we want to get you out of the long-term sheltering. We want to try to find, rent them if you got them, is kind of what we say.
Major rehab companies are already moving into the region, readying to dry out and restore flooded homes. But that can only happen once the water recedes.
The rain hasn't stopped. The flooding hasn't receded. And there's a big difference in the cost of recovery, whether there's 2 feet of water in the home or 8 feet of water in the home, whether it's sat for 2 days or 2 weeks. So cost is really unknown at this point.
FEMA may end up bringing in manufactured homes and trailers, but Director Long said that would only be a last resort. And he added no one should expect to see those on or around their properties anytime soon. For Nightly Business Report, I'm Diana Olick in Washington.
Another image that we have seen over and over in the Houston area, cars and trucks that are completely flooded. For thousands of people, including some auto dealers, Harvey is taking a very costly toll. Phil LeBeau has more on how quickly the people in Texas will be able to get back on the road.
They're a testament to how quickly Harvey swamped Houston. Flooded cars, SUVs, and pickups are spread throughout the city. The water is so high in so many areas, it's estimated up to 500,000 vehicles could be totaled. That includes some that are underwater at dealerships. Right now, most auto dealers in the Houston area are likely to be closed for much of this week. And when they reopen, business is likely to be slow as people struggle to put their lives back together, file insurance claims, and get around to buying a car or truck. Once that happens, sales will snap back.
Scrap the vehicles, and they're all going to have to be replaced. So I expect a significant snapback in Houston, which is both a tribute to the spirit and resiliency of the people there, and that's the American way.
With used car prices already at a record high, it's likely they'll move even higher. That's because the supply in the Houston area will be tighter than normal, at least initially. And what happens to all the flooded cars and trucks? Well, the vast majority will be scrapped. But as with Hurricanes Katrina and Sandy, there are some that will be fixed, retitled, and then sold, often in states around the country where the buyers have no idea that the vehicle they're buying was once underwater in Houston. Phil LeBeau, Nightly Business Report, Chicago.
Coming up, bonds, gold. With all the global turmoil, is now the time to get into safe havens. S&P says the U.S. would keep its AA+ credit rating if the government does not default on the national debt, even if it doesn't rate the debt ceiling, right away at least. Last week, Barclays said not raising the debt ceiling could push the economy into a recession if the situation dragged on. The deadline is 1 month from today, but as Ilan Mui tells us, that likely won't happen without a fight.
Conservative Republicans in Congress are starting to lay out their demands for cooperation in raising the U.S. borrowing limit. Representative Mark Walker is head of the powerful Republican Study Committee, and he told CNBC that an increase in America's debt limit should be paired with reforms of Medicaid. He believes tightening the work requirements to enroll in Medicaid could save $200 billion over the next decade.
We're just wanting something concrete as we go back to the people that we serve and say, yes, we raised the debt ceiling, but here's the good part of it, if you will. Here's the things that you asked us to do as far as putting together some long-term reforms.
Republicans don't want to approve more borrowing without corresponding spending cuts. That's very different from what the White House has been saying. Treasury Secretary Steven Mnuchin has called instead for a clean bill with no strings attached. Now, any deal will need support from both Republicans and Democrats on Capitol Hill. Senate Minority Leader Chuck Schumer has warned that GOP efforts to push through a big tax cut that increases the deficit, that would make it tough for Democrats to help them out on the debt ceiling. Lawmakers have just 1 month to resolve this fight. The Treasury Department says the United States will hit the debt ceiling on September 29th. After that, the federal government won't be able to pay its bills. For Nightly Business Report, I'm Ilan Mui in Washington.
Strong demand for smartphones helps results at Best Buy, and that's where we begin tonight's Market Focus. The electronics retailer lifted its full-year revenue guidance after topping street expectations. Same-store sales blew past analysts' estimates with a more than 5% gain. But the CEO warned that the mid-single-digit rise would not be expected to continue. Shares fell nearly 12% to 55.02. Finish Line slashed its profit outlook for the full year after reporting preliminary results that included sales declines. The company, citing a competitive and promotional environment, said it expects those sales to erode even further. And as a result of that, Finish Line adopted a shareholder rights plan, also known as a poison pill, to prevent a takeover attempt. Finish Line shares tumbled 18% to $8.50. The watchmaker Movado said a challenging retail environment caused sales to fall, but even so, the results beat street expectations and profit was sharply ahead of analyst targets. Shares of Movado soared more than 19% to $28.50. Earlier this month, we told you that defense contractor United Technologies was said to be interested in buying Rockwell Collins. Well, today, the Wall Street Journal reported that UTX is closing in on a deal to buy its rival for $20 billion. Now, such a merger would create one of the world's largest aircraft equipment makers. Shares of United Technologies popped nearly 3% on the news to 118.70. That rise contributed to the Dow's positive finish today. Shares of Rockwell Collins rose 2% to 130.74. And after the bell, Bank of America said Warren Buffett's Berkshire Hathaway exercised warrants to acquire 700 million common shares of that bank. Berkshire Hathaway is Bank of America's largest common shareholder. Shares of Bank of America initially rose in after-hours trading, but they ended the regular day down just fractionally to $23.58. With all the geopolitical uncertainty both here and around the globe, investors took a bit of a flight to quality today, seeking safe havens in investments like bonds and gold. As we told you earlier, gold prices rose to the highest level in nearly a year, closing above the $1,300 an ounce mark, while the yield on the benchmark 10-year Treasury fell to 2.1%. But is now the time to flock into bonds and into gold. John Petrides, portfolio manager at Point View Wealth Management, joins us. Nice to see you again, John. Welcome back.
Thanks for having me on.
The move into gold was certainly impressive in today's trading session, but do you think that it has staying power? Should the average investor move into the gold market at this point in time?
Well, I think it was such an interesting reaction of stocks in general. I mean, prior to the market opening, stocks were down 0.5%, and we actually finished positive for the day, which shows I think there's a lot of pent-up demand for stocks. We're now entering the 102nd month of a bull market here without a bear market. So I think that there's still a pent-up demand for stocks. In terms of gold, we have been owning gold for our clients' portfolios to diversify because we are humble enough to know that we don't know what the future holds. And we think that gold provides a good hedge for that black swan event, for that unexpected foreseen event for clients' portfolios.
We also saw investors moving into U.S. Treasuries. You have argued that now is time to unload some of your bond positions. Is that Treasuries or are you talking corporates? What part of the market are you talking about?
Definitely Treasuries, the higher end quality of the bond market. We would rotate out of or reduce their position and use that proceeds to buy stocks here today, which are on the cheap. And I think that the bond market, the high quality end, 6 months ago, the market was very fearful of rising interest rates. How far and how fast would the Fed go to raise rates? And that would throw bonds off. And at that point, the 10-year was at 2.6%. Well, bonds have rallied with the 10 years at 2.1% on the yield. So the perception has switched from fear of interest rate risk to wanting safety and capital preservation. Well, what happens if the hawks come back and the Fed comes with a more hawkish tone to raising rates? Bonds will sell off very aggressively.
If you do not have a position in the gold market, I want to go back to that. How would the average investor best invest in the gold market? What's the average investor strategy?
So we like the gold miners, and we own a basket of gold miners. One stock is the ASA Gold Fund. It's a closed-end fund that owns a basket of gold miners. So that's how we play it on a diversified way.
John, thank you very much. John Petrides with Point View Wealth Management. Coming up, why retailers are hoping to get a bump from the back-to-school season. And finally, tonight, we told you earlier about the strong sales at Best Buy, but the retail sector as a whole has been having a very tough go of it. But the National Retail Federation says we're expected to spend nearly $84 billion on the back-to-school season, the second highest amount ever. And as Dom Chu tells us, that just might be what the doctor ordered for the ailing group.
It's that time of year again. Back-to-school season is upon us, and that means a renewed interest in buying things and a renewed focus on retail-related companies. This time around, the recent press has been tilted towards the negative side of things for many of America's best-known retailers. Stocks in the industry are on pace for their worst monthly performance as a group since January of 2014. If you look at the SPDR Retail Exchange Traded Fund, the ticker XRT, it's lost nearly 6% in August. The fund tracks small, mid, and large cap retail-related stocks, and it's got about 100 stocks in it. Of those, nearly 30 have fallen by 10% or more just month to date. Among the worst performing stocks, shares of sporting goods and athletic apparel retailers, which many parents shop at during this time of year. You've got Foot Locker, Dick's Sporting Goods, and the Finish Line. Now, a big part of the story developed this week as the Finish Line cut its profit outlook for the year. Bigger discounts and a heavier promotional environment have been pressuring a lot of retailers in this and other parts of the industry. But it's not all bad news. Some apparel retailers like American Eagle Outfitters, Urban Outfitters, and Guess have posted positive returns this month. Many retailers are highly dependent, of course, on the second half of the year for sales, and now it's about whether or not those laggards can really help turn things around as we head out of the back-to-school season and into the holiday shopping season. For Nightly Business Report, I'm Dominic Chu at the New York Stock Exchange.
And on that note, that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks so much for joining us. Have a great evening, everybody, and we will see you right back here tomorrow.